Power of sale properties are increasing as the private lenders who are lending out these funds for mortgage borrowers are calling back their loans. That's the first article we'll be covering on this week's reaction video. The second one we'll be talking about here is talking about how there are fewer apartments available to rent in Canada than any time in 2001. And we're going to go through CMHC's latest numbers that they came up with the rental report. Now, if you are looking for some help on how to navigate this real estate market, you can book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome real estate content that's educational and just awesome for you, just like this one. So the first article we're going to be talking about here from Globe and Mail is private lenders rein in real estate borrowers. And this is what's causing the higher amount of power of sales. Now, I've talked about this in the past before where the power of sales are coming from people who are borrowing from private lenders. So this could be someone's HELOC or it could be a MIC or some kind of alternative lender, because a lot of them right now are either facing no funds on renew if they needed it from like around this time last year, or they are basically facing like, a 3% higher rate increase. Because if you got like say a B lender from last year, you were at 4%. Now you're coming up to like 8.5%. So that's a really big sticker shock for a lot of people. And that's where power of sales are going to be coming in. So one of the few things I've kind of highlighted here is that they said that homeowners so far have been able to cope with higher monthly expenses, but the duration of the increased rates is taking a toll. And we've talked about this before as well, meaning that right now, even though the Bank of Canada has signaled they're kind of pausing the rate hiking cycle for the time being, staying up here is going to take a big toll on a lot of these people. And like I was saying earlier, if you're a B lender and you're renewing, because they're generally one-year terms, you're going from 4% to 8%. So that's a major renewal shock, like major renewal shock. So that's why we're going to see some stress there first. Now there's also talking about how he's seeing more properties listed under power of sales. Now, a power of sale, and I'll just repeat this very shortly, is different from a foreclosure. A power of sale is when you force the seller to sell and they still get the proceeds of it. A foreclosure is when the lender takes over and just sells it for whatever to try to recoup their costs. In Ontario, we do not have foreclosure. Well, not often, but mostly power of sales. So for anyone who's kind of like bearish on the market right now, a lot of people who are A lenders, trigger rates, that stuff isn't really on power of sale yet. I haven't seen much of those, while there are some. Most of them are power of sale through the second lender that's in second position, probably a private, or somebody who's on the mortgage mix side, be on the B lender, because they're kind of basically saying that, hey, look, this person probably isn't able to pay. They're going to force the sale of that property. Now, Benjamin Tal, a pretty popular economist from CIBC, is saying that the Canadians have been handling the rising interest rates well so far, and I agree, but the number of distressed sellers is likely to increase. And he's saying that the 30-day delinquency rate on subprime mortgages, meaning basically non-A lenders, still remains low, but you have to understand, I've talked about this before, that data is very slow and lagging and sometimes like 6 months behind. So if we do see something hypothetically right now, we're not going to hear about it till June. So I take that with a grain of salt. But he is suspecting that about 8 to 10% of the mortgage market is on that kind of non-A side. So there's going to be pain in that non-A side. And if it's 8 to 10% of the market, it's probably a little bit bigger than what most people think. We're going to go from maybe like 10 power of sales a week that we're seeing to like 25. And this is what I was saying at the start of the year. We may go to like 50. But we're getting like somewhere between 4,000 new listings right now. So as a percentage of the new listings that are coming out, the power of sales are still very, very small relative to the people who are just selling. Now, of that portion of people who are selling, are they selling because they're under some kind of financial stress? That's TBD. And I have seen a couple of people with multiple mortgages on their properties that are selling. So we know they do have a, call it, higher motivation to sell because their mortgage and their property is underwater, meaning their mortgage is very much worth more than their property. Now, he's suspecting the same thing too. Like, we're not going to have the US style subprime mortgage kind of meltdown, but it is going to have a little bit of pain coming on in the near future because, again, there's going to be a lot of people who are forced to sell. Now, this is what I was talking about underwater, this little part I highlighted. So many who bought with a typical 20% down payment and a mortgage, about 80%, so that's your conventional mortgage, right? Their properties may have slid more than 30%, meaning their property's underwater. So that means your mortgage is worth more than the property, which is not good because if you do sell it, you actually have to pay back the balance of the mortgage. And he's saying here, this is especially concerning for anyone who took a second mortgage from a private lender at a high rate, interest only, and are finding that they're unable to renew. So the private lenders, we'll call them C lenders, they're not really renewing with these people. So within that kind of duration at the end of it, if they're not able to find that, call it $100,000 or $200,000, that's a second mortgage on the property, then they're basically out money on that property and they have to sell. Now, the problem with some of these power of sales is that person, like the bank who's in first position, is going to get paid back first. So roughly go through how a process works and why sometimes the power of sales may not happen. So if the second position mortgage, say, is $100,000 and the first position mortgage is $1 million, and say the property's worth $1 million, if the second position mortgage wants their $100,000 back and they execute a power of sale, the money, if they sell it for $1 million, say the house is worth that much, will only pay back the first positions, call it the major bank, and then the person that's lending the private mortgage in second position is actually not going to get any of their money back. So you see, there's a little bit of a problem right now because if you have a second position mortgage, you're not going to get paid back because the market has gone underwater and the mortgages are underwater as well. So that's why it's kind of like in a weird scenario. And if there is equity, they may force to sell. But the lender of money is basically saying, if I force to sell, I'm still not going to get paid back, right? So that's why it's kind of in a weird situation right now because the values have come down. So that's why I'm saying, like, lenders, depending on which position they are, they're not really in the business of taking the property back. They still want to get paid, and ultimately they still want to get their money back, right? So they're trying to look out for themselves in their best interest. So in summary, the power of sales are increasing. They're still at a very small amount relative to the new listings, but I suspect as we get to February and March, we're going to see more and more because a lot of the people in February and March who probably have to use a B lender or private lender, like I was saying way back before, to kind of close the property because they bought first before they sold, those are going to be coming renew and they're not going to be able to renew, or they're renewing at an 8% rate if they're B lender. So it really is going to be kind of like a cascading effect of maybe seeing a lot more distressed sellers or power of sales. But is it going to be large enough to cause the market to crash like 50%? Probably not, although the bears probably want that. It's very much kind of like a slow grind. And if you do catch some of these people on the sale, I can tell you there are still a lot of people looking around right now trying to buy and scoop up a deal, because people are still trying to gravitate towards like what market value actually is right now in a weird situation where we don't have enough inventory. So that's kind of where we are right now. Now, if you found this content helpful, make sure you smash the like button and subscribe to the Prime Property channel. And if you're looking for some help on how to navigate the real estate market, whether on the offensive or the defensive, you can book a call with me using the link that's right here. It's www.chatwithzen.com. So the next article we're talking about here is also from the Globe, saying that there are fewer apartments available to rent in Canada than any time in 2001. This is a big problem. And this kind of has to do with a lot of the fact that we have a lot more people coming in, so there aren't much turnover, and also there's a lot less supply, and we also kind of stopped building a lot of rental. Now, one of the key things about this is they're talking about, this is all of Canada, so I'm going to show you some Toronto-based numbers. But this is kind of the big macro picture of what's happening in the rental market, right? So higher net migration going in, a return to post-secondary. So a lot of students are driving into the downtown area, say Toronto, and they're renting a lot of properties. We saw that in the summer. We'll probably see it again this summer. And the spike in borrowing costs is pushing a lot of people who are would-be buyers to just renting a place temporarily. So they're also eating up a chunk of kind of the supply on the rental side. So when you combine all of this kind of factors in from a macro perspective, it means that the demand is outstripping the supply. So that's why there's not many properties to rent. So CMHC came out with the rental supply increases but demand surges kind of report. And there's a couple of things I'll point out. Again, these are all Canadian numbers. I'm going to show you Toronto-based numbers. So you can see right here, the vacancy rate now in Toronto at the end of the year is 1.7%. So that may seem very, very low. And they're saying right here that it was at 4.44% from 2021. But you have to understand that from the last 10 years or so, the vacancy rate was 1.5%. So it's actually low right now relative to last year because we're just rolling past the pandemic, but it's actually above the average of what we normally have, around 1.2 to 1.5% in the last decade. So right now in Toronto, despite all the headlines you're seeing about like rental crisis, I do actually think we have a little bit more supply relative to demand on the rental side. And on the rental side, we have some listings there. They're slower to move, and there's a lot more competition right now because also seasonally speaking, this is a slower time of the market to actually be renting. Now, if immigration keeps piling in, universities and colleges still allow more people to come in for international programs, we're going to see a little bit of crisis again. But you have to remember, we're getting a lot of condo completions and also purposeful unit completions this year. So whether that supply dynamic is actually going to be still kind of more demand than there is supply, we're going to see. But at the moment right now, while we are talking about there is a rental supply crisis, I think it is a little bit overblown. There's still, I think, more supply than there is demand in Toronto right now relative to what we're accustomed to. Is it better than when people are just throwing offers at everything and, you know, making $100, $200 overbid? Absolutely. It's not that crazy, but is it also so bad that, you know, there's no one looking at properties? No, it's like somewhere in the middle as with most things being reported. So kind of like I was saying in my predictions video, I think this year we'll probably get like a pretty flat rental market. It'll still be better than maybe pandemic, but it won't be as good as I think last year when we had way too much demand as everyone was kind of re-urbanizing at the same time. Now, the last thing I want to point out to you here on this kind of report was that it's saying that the stock has increased 2.1% or about 7,000 units in 2022, which is at an all-time decade high, which is great. Like as I was saying, we are having a lot of supply come online. That's why I'm saying that I don't think the current demand is going to outstrip the supply that we have coming online unless we start seeing a lot more immigration coming in. Well, that's a wrap for this week's episode for the reactions. If you are looking for some help on how to navigate this real estate market, again, whether on defensive or offensive, because again, things are kind of all over the place right now. We'll probably have the market watch numbers out next week, and it's not going to be great. And then in January, February, and March, when we do the year-over-year comparison numbers, it's going to be crazy and really, really bad. So be prepared for all the crazy headlines that are coming your way. But yeah, if you do want some help on how to navigate all the craziness that's coming ahead and actually kind of cut through all the crap and understand what's going on in your kind of specific neighborhood of what you want to do, buy, sell, or invest, you can book a call with me using the link that's right here, www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.